my name is Corinne Boone. I'm the global head for the Americas at ACX, or you might know us by Air Carbon Exchange. Air Carbon is the first globally regulated carbon spot market exchange in the world, and we have some other elements to that, which Andrew will talk about in the coming minutes. But we really feel that there's a need for exchanges, and there's an obvious role for exchanges in trying to provide trust, transparency, and liquidity, efficiency, et cetera, in the global carbon markets, all of which we all know which needs to happen in order to have the global carbon markets play the potential role as one of the ways in which to help us move towards net zero. Not the only way by any way or any means, but one of the ways in which to do that. So what we want to talk about today is sort of themes around that. So specifically themes around, the value and the importance of exchange from different perspectives. And today we have some very different perspectives here in the room. So I would like to just briefly, and I'm going to frame this around a discussion, if that's okay with you. We started off by thinking, okay, well, I'll just ask a bunch of questions, and Amy, thank you, Amy, we had a call and I came off that, I was like, oh my, this is not going to be good. But then I was thinking about it and I was like, maybe we just need to frame this as a discussion. And that way we can have the benefit of the experience and the opportunity for the speakers to think and talk and give their perspectives as it's happening. So I'm just going to introduce our speakers, and then you'll see what I mean. So our first speaker is very relevant right now as we speak, just coming out. Our first speaker is going to be Andrew, but the first person I'm going to introduce here is Lisa DeMarco. Lisa, I've had the pleasure of knowing Lisa for many, many years. We won't say how many because then that's going to date us. So we're both 39. So, but we've both been in around the carbon and sustainability and energy space for many, many years. And so Lisa is the CEO and senior partner of a company called Resilient LLP, but she's also a Canadian negotiator, negotiating Article 6 here at COP. Been doing that for a long time. Lisa has also been very, very heavily involved in the carbon markets for many, it's possible to shut that door? For many, many years. She's a world-renowned lawyer, and we'll be sharing some of the experience that she has in and around Article 6 and in around some interesting work that they've just published recently. And so we're very, very pleased to have Lisa with us. Next to Lisa is Andrew Cullen. Andrew is a colleague of mine at ACX, which is why I didn't really describe too much about ACX, because I'll leave that's his job today. Andrew is the head of sales at Air Carbon Exchange, or ACX, and so really is trying to figure out ways in which to facilitate ease of transactions for buyers, for sellers, and also for linkages through the use of blockchain and digital, for linkages into as we have linkages into all the registries, but figuring out how to look at ways in which to provide buyers and sellers opportunities for liquidity, and at the same time enhancing transparency and trust. So he's actually the architect of one of the very interesting products that we've developed recently, which he'll talk about, that facilitates ease of use for brokers. Next to Andrew, we have Amy Merrill, who's the interim COO of ICVCM. And Amy is a lawyer with over 20 years of experience, and has also worked for the UNFCCC on the Kyoto mechanisms. Wealth of experience, really has, the ICVCM has really stepped up and provided some amazing context and backbone for structure around quality and for implementation, and she'll talk a little bit about the VCM and how that is, the ICVCM, and how that's meant to help the markets realize their potential, and also some of the challenges, and how she sees us using the potential role for exchanges in that regard. And then last, we have Carlos Matias Martins Jr. I've also had the benefit of knowing Carlos for 20 plus years as well. I was Carlos's broker in the early 2000s, and we did a lot of CDM transactions throughout the world, many of which originated in Brazil, but we've grown and done transactions all around the world since then. Carlos is the director and founder of many different companies, but ones that are relevant for this are Equal, BlockC, Eco Invest, all of which are focused in Brazil and focusing on CDM, renewable energy, and really trying to figure out ways in which to enhance the opportunity to reduce environmental impact and produce good products, whether they be in the energy, mining, or other space that can help to move towards clean technology and renewables. Carlos is also the Brazilian partner for ACX, so I'm also going to mention that as well. But what I'd like to do is, we're going to have the different participants in the panel spend, 5 to 7 minutes. I gave them a list of potential speaking points, and ranging from helping you understand who they are, what they do, why that's important, because they all have such an amazing wealth of knowledge, but also sort of their views on exchanges, their views on voluntary markets versus compliance markets and integration thereof, and Lisa with VCM, I forgot to mention Lisa's on the board of the Voluntary Carbon Markets Initiative, as well as the chair of the International Emissions Trading Association. So you get a whole wealth of different experiences. Rather than me asking them all questions, I'll have them give a short brief and talk about specifically as they sort of weave their remarks into what they see as the value and the role of exchanges from their perspective in helping with the carbon market to reach its potential. So just in terms of what I thought I'd do is ask Andrew to start off, but then I'd like to bring it back to Andrew at the end, because then again, we're going to get to the role, conclude up again with the role of exchanges. So do you want to just give a few remarks, Andrew, and then we'll start from there.
Hello. Okay, it's working. Thank you for the introduction, and thank you all for coming. Air Carbon, now known as ACX, we were mostly conceived about 5 years ago by the Singapore, approached us to make an exchange for voluntary carbon markets. And we've been live for about 2.5 years now. And the real sort of thinking and belief behind it was to, commoditize carbon in a sense. The market there's a huge amount of friction in the market, barriers to entry. And what we were trying to do, and we are doing, is lowering that barrier to entry. So one of the key areas that we have done is we act as a custodian. So we actually have registry accounts of Vera's, Gold Standard, and we allow people to use that to be able to purchase carbon credits through the exchange. And you can also retire as well. So first barrier of entry taken down there. So we can see large corporates coming in. They don't need to go through that. We're simplifying the process. And then the transaction itself, historically, trading carbon can be very time consuming. You have to, KYC, the counterparts. We're talking about a global market here where, someone in Singapore could be buying a carbon credit from a project developer in Brazil. So that can be challenging in itself and difficult KYC procedures. And then you have the concept of having to sign ERPA agreements. That can take weeks, if not months, negotiating. So through the exchange, you agree to the exchange terms, and there is no ERPA. So again, we can actually transact carbon credit same day. So it's making it super efficient, super quick. And also as well, it's making it a global market. We're pooling liquidity together. So we're on Air Carbon, we have over 250 members now in 32 different countries. So that's very important. And part of our strategy and what we're doing, which I think is going to be huge and we're good to talk about later, is that global connectivity. Because what we're seeing at the moment in the market is a bit of a land grab. Everyone's trying to build their own registries, exchanges, marketplaces, and actually that will make it more challenging. If you're a big major corporate like Shell or someone like that, having to onboard to multiple different registries, exchanges, different terms, it actually will make it more fraction the market. So what we're trying to do is actually pull that liquidity, be a sort of a key player. We're headquartered in Abu Dhabi. So what we're doing is having a central order book in Abu Dhabi, but we've recently announced a partnership and we've gone live in Indonesia. So we've built the exchange for IDX there. It's a domestic market at the moment, but the plan is to open that up into an international marketplace coming via Abu Dhabi. And then we've announced a partnership in Greece with Athex Exchange, and there's others to be announced in the coming days. And the concept and the idea is that Abu Dhabi is our central order book, shared liquidity. But if someone lists a credit, say in Indonesia or Singapore, if a member in Greece comes onto the exchange, they can buy those carbon credits. So we're bringing that all together, which is hugely valuable in a market that there are lots of frictions and points on that. And behind the whole back of it all is digital. Carbon is digital by its nature. There isn't a physical ton there. It's a PDF on Vera or Gold Standard. And what we're trying to do is bring that digital arm, make it super efficient, we've got all the details and the smart contracts there. So it's super quick and easy for people to have information to their hand. Now then you throw in, the different registries, you throw in Article 6 corresponding adjustments. What we can do, and the way we've built the exchange, again, and talking about this global market, is as and when it's defined, and it gets that corresponding adjustment tag, that credit can be on the exchange, it could trade multiple times, and we can track that. So as and when someone retires that credit, we'll know where that corresponding adjustment pops up. There's still definition around Article 6 around that. So those are sort of the key areas we're growing and we're building. And there's two sides to the exchange. So we've got the standardized side of the exchange, which I believe is going to be huge for the market in the future. And again, what that's trying to do is to an extent commoditize carbon. But what we need for that is standards and buy-in from the marketplace. So Corsia is a very good example. At the moment, if you want to buy a Corsia credit, as and when phase one's defined, you're going to have to search for the projects to your DD, make sure you're actually getting what someone says is a Corsia phase one credit. What we can do on the exchange is guarantee good delivery. So we can create a contract that allows you to come in, you can have a very strong price signal, you see where the market is at, you'll be able to buy those credits, and we guarantee they are Corsia phase one, and they're good for purpose. So that's when I think the standardization and the exchange on that side of the business will really rocket, because we're simplifying the process, we're making it easier for people to access the market. And then on the other side of the exchange, whilst that standardization is growing and building, we have a carbon market board, which is project specific, because as we have seen, the market is still very much, they want to touch and feel what they're buying. And again, that side of the exchange, people can buy individual project credits from projects. We facilitate that transaction. The developers send us the credits, we get the funds, we settle on the exchange within 48 hours. So it's super quick and efficient from that side. So I think, again, the market, carbon market, it's huge, it's vast. And it's very important we all play our roles, and we're being very defined as an exchange. We are the transaction side of that, making it very quick and easy for people to do that, and then allowing the market to grow. So it's all about working in partnerships and growing that marketplace. So I think that's enough for me, Corinne.
Sorry, I just heard some noise. Okay, thank you very much for those remarks. Were there any questions of clarification before we move on at all? Any? Okay. So what I'd like to do now, if you agree, is pass it over to Lisa. Is that okay? And then we'll go over to Amy, and then we'll go on to Carlos.
Well, thanks very much. I'm going to have just a few brief comments because I'd love to get the questions going here. Generally, a lot of what we do in transactions is in and around the initial diligence, going into the very simple who, what, who are the parties to the transaction, what exactly are you buying and selling? And you'd be shocked at how difficult the answer to that question often is when you're doing diligence. When will it be delivered? And how will it be delivered? And what are the consequences in the use of the product? So a lot of these issues are complicated. In particular, ensuring that those minimal standards of ownership the party that you're transacting with has, the actual ownership of the unit that you're transacting, that the unit that you're transacting is what you think it is, and it's fit for purpose. A common clause in a number of contracts that are bilateral is that we do not guarantee fitness for any particular purpose. When is it delivered? When does title transfer? Very important. What is the time? What is the moment? What is the date when title transfers from one person to another? Does it happen on payment, or is payment made first? Then does transfer occur? And then finally, in terms of how you can use the associated unit for a particular purpose is going to be very relevant. So each of these elements are somewhat simplified through the use of an exchange in association with very strong and existing standards like the ACR, like Vera, like any other number of standards of the market, gold standard as well, I would point out. So from that perspective, let's talk about who. There's going to be initial diligence before you onboard a party and their associated credits. You're going to do diligence to assume and to verify that there is related ownership. Secondly, in terms of what you're selling, you're going to define precisely what the unit is. And in many instances, you're going to address what the purpose that you can use that unit for will be. You mentioned Corsia, for example. That is a compliance-related credit. And there's some diligence done in that regard. And certainly, last but not least, there's greater certainty in terms of title transfer, when it occurs, how it occurs, and the potential to use the exchange for that holding period, if you wish. Legally, Amy can speak to this as well. We've often used escrow structures, which are costly and complicated. This may simplify a number of those mechanisms. So this is where I see a lot of interesting opportunity for intermediaries in the related market. And it's a function of what we've done to date and how we can actually increase liquidity in the associated market. So those are my thoughts in general.
Maybe if I could, yeah, I've got one here. Maybe if I could just, Lisa, impose on you a little bit. You know, one of the things that you're here negotiating, and we're all here, some of us are working on negotiations, others observing, is sort of the Article 6.2 and 6.4 aspects of the Paris Agreement. And, you know, we're all quite heavily involved in the voluntary carbon market, and we've all seen a lot of challenges in the voluntary carbon market in the last 8 to 10 months around some of those issues, you know, issues around perceived issues around quality and things like that. But what do you think it's going to take, you know, for the VCM and the compliance markets to be somewhat interoperable in the future? Because in my view, I'll just state it, is that if we don't figure out a way to make these markets, you know, be somewhat fungible and interoperable, we're not going to have, you know, a voluntary carbon market, but we're actually not going to have a successful Article 6.2 and 6.4 as well. So can you give any general thoughts on that?
I can. There's a number of integrity initiatives that are ongoing, and I'm going to certainly hand over to Amy on the supply side integrity initiative, and that's the Integrity Council for the Voluntary Carbon Market, which has come up with core carbon principles, and they're going through a process of approvals and accreditation that are very significant, and I'm sure Amy will speak in detail to that. On the demand side, I sit on the expert advisory group of the Voluntary Carbon Market Initiative, which has just released a claims code of practice, a claims code which allows for precise language on the demand side to give certainty in relation to what you're purchasing and what you can say you're doing in relation to science-based targets or other related targets that you might be implementing. So I think those will be helpful, but we certainly need consolidation in the thinking, and we're seeing it play out in the negotiating room now. Very different views on what integrity is, what good quality is, and our friend, the negotiator from the EU, used the statement this morning, don't let perfection be the enemy of the good, but if we can't get perfection, we should have excellence. So help us determine what the difference between excellence and perfection is, what the difference between good and excellence is. We're wading through in a fairly messy way that process right now. So there's hope, but there's work to be done.
Thank you very much. I'd like to now hand it over to Amy to give some remarks. Thank you very much.
Okay, so let's try to build the story here, right? We've got exchanges that can provide liquidity of trades, right? And can make efficient transactions that are secure, and you know how to do it. Lisa's described what a transaction is when you're looking at ownership issues. In exchanges, you have that security of knowing what the ownership issue is, and has talked about, you know, what's the asset type, where's it coming from, and has talked about the use case. And so the question then becomes, what do you choose to buy? What do you choose to buy if you're engaging in the market? And how do you know what's the right thing to buy? And that's what the ICVCM set out on its mission to help do, to provide to the market a barrier level, a threshold above which you could say, if I want to engage in this activity, in this market, I can choose a CCP-labeled credit because the market, the stakeholder-led process that the ICVCM represents has gone through a process of saying, this program, this credit, this constitutes high quality, high integrity, right? And one of the overall issues we face in any of the carbon markets goes to this nature that Andrew talked about, which is that we have to achieve scale, we have to operate on the basis that we can make big transactions happen efficiently, but projects are innately individual to the place in which they occur, the people who undertake them, and the country in which they operate. And so the ICVCM has developed 10 core carbon principles, which anyone in this room who's worked on carbon will recognize are 10, almost universally accepted principles of good quality. And you see them play out in the Article 6 rules we wrote. I was previously at the Secretariat for the UNFCCC with the pen for Article 6. And those, you can see those rules there in the Article 6 rooms as well. And what we're trying to do in the voluntary side of the carbon markets is help go through a process where carbon crediting programs and the categories, the methodologies operated under those programs can be assessed against those core carbon principles, and the highest quality credits will then be labeled. And that label is a tag on the actual credit. And that means it can show up in an exchange and it can show up in a registry. So you reduce the barrier to entry and you provide assurance around the tagging, but you provide assurance into the market that the carbon credit that has been through that process has a high quality behind it, has high integrity, social rights, sustainable development, FPIC, free prior informed consent, relevant elements of the human integrity, relevant elements of carbon integrity, quantification of emissions have been checked, and that methodology is seen to be robust. And what that does is that enables the carbon market to scale, because buyers' barriers to entry are lowered because they can find good credits in the market. And one of the interesting discussions emerging at this COP is the narrative around lowering the barriers to entry so that people who don't act no longer have the excuse not to act. So one of the challenges we faced in the voluntary carbon markets is that because it's difficult to identify what's high quality, buyers choose to do nothing rather than do anything. And we can talk to VCMI and SBTI about the amount to which you do that. But if you have a clear quality credit, whether it's in the voluntary market or in a compliance market, your reason for not acting goes down. And that enables scale and it enables finance to flow to countries where mitigation actions have real human benefits on the ground. So I could spend a long time telling you exactly what we're doing in the ICVCM, but I think the message for this panel is that if we have the right building blocks to build integrity, to identify good quality credits, efficient transaction, and effective and respectable use cases, we can actually achieve a lot of finance flow and achieve a lot more mitigation and a lot more development improvements than would otherwise happen. So I think that's the piece I'd like to bring. And the interface with the carbon markets negotiations going on in Article 6, which are very dear to my personal heart, having spent many years of my life toiling over those texts, is that over there as well they're looking at what is quality when it's between countries, what is quality when it's a central mechanism, which is now competing with independent carbon standards, some of whom are represented in the room here. And what is integrity of use cases at the international level? And what we're finding is that a carbon credit is a carbon credit if it's a high quality carbon credit is a good carbon credit wherever it comes from. And use cases are being defined now in many ways that merge these markets. So we have supply, and it can be independent. It can come from a project that is being operated under an independent standard. And it can also be used and co-opted by a government for a demand side. And so you don't have to have this distinction between the markets anymore, but supporting that merging and that everyone delivering towards NDCs, everyone doing stuff that aligns towards Paris, that requires everything to be operating at a good level of integrity and across all those fronts of what integrity looks like. So I don't think there is a voluntary market and a compliance market anywhere left now. I think we are moving towards looking for high quality action across the spectrum.
So thank you very much. That's very, very interesting. So let me just maybe give you the opportunity to expand a little bit more just with this question. So I totally agree with what you're saying, by the way, but I think, right now we have, quite a disjointed relationship between the voluntary carbon markets and the compliance markets. If you're in a compliance regime, you're not really talking voluntary. If you're in a voluntary regime, you're not really integrated into the compliance markets. We have all kinds of standards in the voluntary carbon markets. Then we have Article 6.2, 6.4 coming on compliance, and then we have countries and states and regions that all have compliance markets. So you said, okay, if we have a carbon credit and it's high quality, that's what we're trading globally. But how are we, I think the challenge is how do we get some of these, get rid of some of the fractionalization which arises when there's all kinds of different standards all around the world. So how do we merge those together and not just the market so that these credits can be fungible?
Yeah, and I think it's a really interesting last 2 years, right? Because it's really in the last 2 years where that domestic interest has raced back into the market, and we've started to see domestic governments realize that they can incentivize through standards. But we have a sort of, we do have a risk of fragmentation, but that's why integrity on the supply side is really important, because it enables buyers on the demand side to identify high quality, and it enables countries seeking to incentivize high quality demand in their own country to use reference points. So if the ICVCM core carbon principles can be used as a reference point by government. And we have to start building this talking to each other, and what is a alignment on the level of principles and quality to enable scale without further fragmentation. And I think you're right, but I think that's how markets mature, right? And
I'm just sort of referring to all the different standards that are all in the way as well.
But so we see countries entering into MOUs with independent programs to supply 6.2 credits, right? And that's a really interesting example of why there's no longer voluntary and compliance anymore, because countries on the supply side can co-opt a voluntary market program.
Yeah, I think, one second. I think, Lisa, did you have anything you wanted to add on to that? And then Andrew, and then I'm going to get to Carlos.
Just to add on that, I think that's a complementary pathway between voluntary market standards, which have been through many years of integrity work and are going through the process of facilitating their demonstration of compliance with those carbon principles right now. And they're also a hub for innovation. So I see that as a coexisting continuum, really, of not necessarily competing entities, but a body of innovation where there's much more nimble thinking going into the broader compliance markets, and I like that. It works for me in terms of not stifling innovation or waiting. How many years have we been trying to get the rules operationalized since Paris? 7 years to get rules operationalized. I think there's a lot of value in the nimble and innovative nature of what the notional, and I agree, it's not voluntary per se, it's not discretionary whether you comply with their rules. You have to comply with their rules. So the pathway from the innovative market to the compliance market, I think, is important.
And all that
Andrew,
all I was going to add on that is I think the biggest issue and the challenge in voluntary market is that it's voluntary. If tax was voluntary, 99% of people wouldn't pay tax, and so there will be a merge between compliant and voluntary market. And the other issue in the market is the reputational risk. If you buy carbon credit today, it's on your back. You're the one that's done the DD. You've gone out, you've bought it. and then if the Guardian writes an article about you, whatever, it's on you. Whereas the beauty about these standards is it's one removed. Whether it's a government, whether it's an industry body, if they come and say, we deem this standard good enough for you to buy and retire, then that's great. As a corporate, I can go out, I can buy those credits, I can retire, and then if someone flags it at a later date, it's not my fault. They're the ones that signed it off. And that's powerful, because that's you know, everyone's sitting on the sidelines. It's better to sit there and not do anything than anything in the moment. And that's the sort of the brutal truth of it all.
Thanks, Andrew. So now I'd like to hand it over to Carlos, and Carlos will give us a perspective from the project developer side and
All right.
wealth of experience in this
Thank you.
space.
But I just wanted to jump into that. I wanted to start saying that it's probably the most expensive panel of the day, because the two qualified lawyers, Lisa and Amy. So I'm glad I'm going to ask them, and they won't charge me this time. So just wanted to jump into what you said. You don't want. My background is a regulated market, right? Regulated whatever framework for carbon offsets. So you don't want to ask a barber whether you need a haircut. What I'm going to say here is something, I'm trading my own book. What I tell the voluntary market all the time is, please grow and become regulated. I like the connection. It's valuable to have the transition and the work that you are doing, but ideally we want everything to be fungible into the regulated framework. And your comment, Andrew, on reputational risk, which is really key to us as project developers. I'm not so sure that the voluntary framework will stop the Guardian publishing weekly pieces of news claiming that there's no integrity in the market. The beauty of having a regulated framework by government is that you just tell the Guardian that they should call the government of Brazil or the government of UK and say, I'm sorry, I'm following the law. And that's really where we want to be when we have the fungibility of everything that you guys are putting together. And hopefully once we have enough volume from the voluntary market that is fungible into the regulated framework as it's being negotiated with the UN and bilateral agreements, several bilateral agreements with several countries. Fungibility will guarantee enough supply that then hopefully we'll be able to achieve the goals of reducing emissions with the offsets. I just wanted to also talk a little bit about what's happening in Brazil, given my background. I'm never been focused on nature-based solutions, and whenever you come from Brazil, you just wanted to hear about nature-based. But I just wanted to start saying that there's no money that will be able to stop deforestation of the two most important biomes of Brazil. We're talking about north of 500 billion US dollars market value of property land in the frontier of the Amazon and the Cerrado biome. The world has not been able to deliver $110 billion that was committed in 2009 in Denmark, Copenhagen. So there's not enough money in the world to say to a landowner in Brazil that wants to grow soybeans and has the deforestation license to grow soybeans. You either pay them $10,000 a hectare, or I don't know. We have to change the constitution of Brazil. So I'm not bullish when it comes to that. I don't think the world realizes, and it's probably our fault. Brazilians believe that we're going to be financed buy all sorts of instruments that will come up with $150, $200 per ton of carbon inventory or carbon sequestrated in the biomes. I don't think that's going to happen. So I'm not so bullish when it comes to that. And I'm hoping that we'll be able to figure something out in terms of putting together a proper framework that addresses sustainable development and sustainable forestry in Brazil. Coming from the hard-to-abate sector, what I see is we have a huge opportunity for biomass to energy carbon capture and storage in Brazil. And that is finally something that will hopefully deliver the offsets that will save the world. And I know some of us here will not be happy, but the oil companies will be able to survive. But at the end of the day, I'm hoping that we'll be able to raise the bar of the voluntary markets so that there's no real issue between the fungibility of the voluntary and the regulated market. I guess that's, I'm not prepared to be bullish, and I wanted to ask questions to the lawyers, and because I talk to you all the time, so.
Yeah, but you're on the panel, so you can't ask questions of the, well, you can.
Can I ask the audience? And then
Yeah, you can actually. No, actually, we're just going to.
Okay.
If you are you finished or?
Yeah, I just wanted to say something else that I forgot
please,
here.
go ahead.
Well, there's a bill that is being passed, negotiated Brazilian Congress, and I don't see anybody from government here, so I'm gonna be. There's a say that a businessman only tells the truth anonymously because you don't want to say the truth, and then all of a sudden you get sued. But there are three problems with the bill that is being passed in Brazil. One is Brazil is the only country that would regulate carbon credits as a security, and that is going to be a lot of money paid to the financial sector. I have a friend here in the audience who won't be happy with that, but that's number one. Number two, the agri-sector is out of the regulated market in Brazil as of today. So the whole thing I was saying about the cost of stopping deforestation of the Cerrado biome is probably not going to happen within the near future. And the third problem, and it has a lot to do with what we just discussed here, Brazil is looking at some sort of fungibility between the voluntary and the regulated market, and I think it's a mistake. I defend that we separate the two markets. I don't want to give Vera, Gold Standard, GCC, the right to, at some point, claim that wind power is no longer additional in Brazil. I don't want to give them that right. As a sovereign country, I want to have that negotiated with Congress. And if I want to change the methodologies, I'd rather look at the UN instead of giving the right to an NGO in Washington, D.C. There's nobody from Vera here. So. Because I got killed when they canceled it. All right.
Okay. Actually, that's an interesting. It is actually an interesting concept in that. And I don't know, what I'd like to do is open up for questions, but I wonder if there's anything that any of the panel wants to add on any of the remarks that they've heard from the other panelists so far, and then we'll open it up.
I mean, just that point around the issue of sovereign rights of countries to determine what happens in terms of mitigation activity within their country. I think that's something that we looked at for a very long time in Article 6. And I think it's still, it's that slight market issue around an independent standard defines what it will process. It doesn't define what can happen. And that's an important distinction because these are, many of these independent carbon standards are operating as NGOs. And when a government decides to co-opt that process, they still retain the sovereign right to determine which bit of that process they co-opt and how they would supervise it. So I think I understand the concern that it could appear like that, but I think we have to recognize that the sovereign right of countries is generally undisputed in that.
Yeah, no.
Go for it.
No, I understand. You're right. My point is that one of the reasons why you want to have fungibility between the two markets, at least in Brazil, is that you can somehow regulate, or you can use the supply from the voluntary market to keep prices at some level, right? So imagine that you do a 3-year forecast of supply and demand using Vera credits, right? And then 2 years down the road, Gold Standard decides that wind is no longer additional. Everything that all the forecasts that you put together, who do you call, right? If there's a crisis, who do you call? You won't be able to negotiate with anybody. I remember when they announced, Vera and Gold Standard announced that renewables were no longer valid. The carbon intensity of the Philippines is 700 kilos per megawatt hour. It's like you want to pay this, you want to pay the Philippines to subsidize wind, subsidize hydro, and then Vera and Gold Standard decided that wind is no longer additional in the Philippines.
So let me just jump in with a traditional legal statement. The devil's in the detail, and the devil is definitely in the detail of the compliance system. So if you're dealing with, for example, a regulated cap or a regulated emission intensity output-based standard, which allows for some flexibility through an offset mechanism, the infrastructure of the voluntary market standards becomes very important. And the government still has control over which protocols it accepts or doesn't accept, or which units it accepts or doesn't accept. So I think in a truly regulated market, and I do agree, there are issues with regulating as a security, not as distinct from trading subsequent trades as a commodity. Different, very different. We need to look at the overarching system before we make those broad characterizations of whether or not there's integration of the voluntary standards as flexibility mechanisms as opposed to writing them off. And I would caution against the latter.
Yeah, no. I just want more supply. I just don't want to be dealing with the same NGOs all the time. That's what I'm saying, right? Because they have too much power. Okay, I know I'm doing it.
No, that's fine. So again, herein lies, like for those of you who are sitting in the audience, the panel members here, all of us, I mean, I've been in the markets for over 30 years, I think combined. We could probably got like 110, 115 years here. Let me finish, Carlos. And there's issues that, we're trying to discuss and don't agree on and are learning from each other right now. You can imagine the countries and individuals that are and regulators that are trying to develop these markets all over the world, the members of the 197 countries that are involved in these Article 6.2, 6.4 discussions, and then there's the voluntary market. I mean, there's a lot of, like Lisa said at the beginning, there's a lot of difficult concepts and challenges and issues being negotiated here. And, if we can figure out a way with the experience that we all have, in the standards and in the voluntary carbon markets, et cetera, and pathways between the voluntary and the compliance markets to find out the ways in which that they can be, to the extent that they can be fungible, but also recognize the cultural distinctness of various countries, Brazil, Chile, and others. That would be a win-win in my book. And, working towards that is very interesting. So there is a role for the voluntary carbon market to play in helping to get to good agreements on 6.2 and 6.4. And in my view, there's a role for exchanges to play just as well as ICVCM and VCMI and all of these organizations that are trying to bring clarity and transparency and quality and ethics and, know your client. So before carbon credits get traded on our exchange, we know exactly all of the issues around the buyers and the sellers. We know if they've met the standards. We know what registries they're linked in. We have accounts with all of those things are helping us to get to a little bit more clarity and trust and security and efficiency in the market. Tons more work to be done, granted. But, I think that, moving in this direction and taking all the lessons is really helpful. What I'd like to do now, and I hope that you will, because we still have some time left, I'd like to open this up to the audience for some questions, for some discussion, for your opinion, if you wish to give that. And I'm going to let you just ask individual panel members or throw it out to whoever you'd like. So with that, there's the lady at the back here with the gray shirt that has a microphone.
Hello. Can you hear me now? Good morning, everyone. I'm sorry I'm late. My name is Maria Belén. I work for Banco Itaú. I am the head of carbon for the Brazilian bank. It's the biggest Brazilian bank. And I just wanted to comment a little bit on the regulation. First and foremost, Brazil has been in dire need of some regulation for the compliance market for a long time. So I'm really welcome that the government has done such a huge effort coordinating all these ministries to put a bill together that is right now in Congress. The government tried to regulate compliance market, and there was discussion within the government if compliance markets were going to be commodities or financial assets or securities. And in the end, for some political reasons, they decided on securities. But since it were compliance markets, we couldn't really disagree with them because, it is a compliance market, and in most of the world, compliance markets are securities. And then the other particular point about it is that they tried to regulate also voluntary, which is very atypical, but it was also needed for a number of reasons. And the reason why voluntary markets became as well as security is because there is an intersection between the two. And in Brazil, the intersection makes sense. Brazil is probably the single most greatest country to offer voluntary carbon markets. So it would make sense that when you regulate a compliance market, you allow for a piece of that to access the voluntary carbon market for the compensations, for the allowances. It makes absolute sense. So for the intersection piece, for those voluntary credits that enter into the compliance market, they will become securities. Yes, there is a very basic legal reason for that. They have to have the same legal nature. But at the same time, the other pain that we had as financial markets was that because we are on the offering side, we are financing the developers, we needed a legal nature of the voluntary carbon credit that would allow us to put these things on our balance sheet at a reasonable cost. And this is something that I'm very aware my colleagues in Europe don't really see because they don't need to finance projects as we do. But for us, that we are literally financing farmers and developers to put together the RED Plus and their reforestation projects, it's really important that when we extend the loan and we take a voluntary credit as guarantee, it has some legal nature that it's friendly to the financial market. Now, we didn't need it to be a security, that's for sure. But it would have been fine if it were a commodity or if it were a financial assets. But that's what the government decided, and we have to live with that. The point is it couldn't be an intangible asset, because if it is, it costs 100% of the capital of the loan in capital charges, and the taxes are absurd as well. So we needed a treatment that was beneficial to try to finance this market. So with these two comments...
She's the friend in the audience, yeah.
No, I just wanted to give you a little bit of extra context on how the Brazilian market is trying to do it. But the law is still in Congress. There's still some things. And finally, the point about the agricultural sector not being part of the bill. So this is a cap and trade system. And there is not a single cap and trade system in the world that includes agri. We've studied this. It's impossible because in the cap and trade, the measurements that you do, they need to be stable. You need to have a stable issuance to be able to measure your progress through time. So they couldn't do this with the agri. And of course, there was a huge pushback as well from the agricultural sector that they didn't want to be part of this. And if we were going to include the agricultural sector, we were never going to pass Congress because they're just the strongest force in Congress. So there was a technical reason as well as a political reason. But I think that we all came to the conclusion that the agri sector can be a part of the solution, not in the cap and trade, but perhaps in the voluntary. And can have other types of regulation, perhaps a tax would be appropriate. So not cap and trade is not what we call it it's not bulletproof. It's not for every single sector. But it was important that the distinction between the agricultural sector and the industry in Brazil.
Can I just provide a little bit of a clarification on that? A number of countries do have the agricultural sector covered in certain ways, either through the fertilizer sector being directly covered as capped entities that have a regulatory obligation, and or through agricultural practices themselves forming part of the flexibility offsets.
The agri-industry is part of the system, the compliance.
Yes.
What is not part of the compliance for Brazil law will be the productor rural, so the farmer.
So farmers in certain regulated systems, such as California, and certain Canadian systems have the ability to create offsets that are compliance mechanisms. So while they're not included as a compliance entity, they are part of the system. So I want to clarify that. And the other thing I wanted to mention was in relation to the legal fundamental nature of the what we're trading, there are two major global initiatives ongoing that are looking at that issue. One is through UNCITRAL, United Nations Commission on International Trade Law, and the other one is through UNIDROIT, DROIT. And they are looking at this issue very distinctly with full recognition that there are domestic legal contexts that need to be respected. But they're trying to achieve some international guidance to facilitate the fungibility when we go to trade internationally.
And to bring it back to the exchange, you mentioned trade financing and whatnot. What we're doing in Abu Dhabi, just down the road, is we are fully regulated. The FSRA, they're deemed carbon as a commodity, and I think that's hugely important because it brings that rigor, that structure. But what an exchange can do is bring that price discovery. If you have a liquid market, whether it's nature-based technology, whatever the standard is, and that gives a very strong price signal to the market, which is hugely valuable. We're trying to, create carbon into a proper financial product, and the benefits that come with that. So at the moment, if you're a project developer and you've got, 50 million tons in your Vera account, how do you sort of monetize that without selling it? How do you show the true value? It's a massively opaque market. Similar credits might have traded at $5 yesterday. Something else traded 6 months ago at $10. How's a bank going to help you finance that? If you've got a strong product on an exchange that's liquid, that's trading, that's regulated, you have a mark to mark every day. A bank can actually look at that and go, well, yeah, that's the value of the credit, and that's hugely important. So if we can help build that liquidity and that rigor, then we will have a functioning market which will benefit the project developers and make it easier for them to get finance, make it easier for them to expand and grow without getting into long-term offtake agreements with people that are taking advantage potentially.
Thank you, Andrew. Hopefully with some other questions? Actually, you had your hand up first, and then the gentleman over here. So could you just tell us your name as you...
My name's Connor Jenkins.
From organization?
Food and Trees for Africa, that's who I'm here with. So I just have something in the back of my mind is the issue of double counting. And what I wanted to ask is, without a sort of unified carbon tracking system between not even nations and companies, but even communities and individuals, would this great merge of compliance and voluntary markets, for anyone who wants to answer, do you think that'll increase the risk of double counting or even reduce it? And just sort of what I'm thinking in my mind, and maybe, that's the flaw here, is if, say, a country's lost 10 trees to firewood and they sort of report those emissions. Now, is some private player going to come up to them and say, sorry, you actually need to report 3 times those emissions because we rolled out some cook stoves and sold the credits to your neighboring country?
I think from an exchange perspective, what we've done is the blockchain. So when a carbon credit's on the exchange, we create a digital receipt. It's immutable. That can't be double counted. We hold it there. If that trades, we can ping Vera Gold Standard. Everyone knows, we're completely transparent who the owner is. So from an exchange on the trading side, we've created a system. And then if we then plug into the registries, and if there's exchanges in Africa, in the Middle East, in Asia, that digital receipt has all the metadata and all the information that's uploaded at the source, and we can track the whole life cycle of that carbon credit to retirement. So that is helping build the infrastructure. I mean, there's a lot more legalities and reporting needed on that. From an exchange perspective, we're sort of helping solve that issue there.
And let me highlight the Climate Action Data Trust, which is in fact a function of 3 entities: the World Bank's initiative, the Singapore government's initiative, and IETA is involved in administering it, with great congratulations to the organization for doing so. It's a meta-registry that sits on top of all associated registries, or will when fully operational, and it was formed for the exact purpose of ensuring no double counting or double claiming between the gaps in registry or national systems or the international registry or the mechanism registry, as we continue to have correlated and contiguous reporting systems.
I think those are the answers around the infrastructure solution, but there's the issue around the claim and the understanding of where in an inventory, in an emissions balance, under Article 6, or in your corporate reporting, right? And that's the other side of this. Double counting is about double claiming as well, right? And it's about the idea that in certain circumstances, more than one claimant making the same claim can have can raise reputational concerns. And the debate in the market is around, the question of whether a credit that we call authorized under the Article 6 rules. When we designed the rules in Article 6, we didn't envisage the voluntary market, but time passes and the voluntary market grew in between. The question around, and this is a technical point, so zone out now if you don't want to go technical, and we'll bring you back to the top. If you want to do if you talk about corresponding adjustments, that's because you're adjusting because the country has authorized it, which means the host country is going to reflect that transaction as part of its emission balance. And in the voluntary market, that creates a one-way system out of the UNFCCC accounting, except for reporting, because UNFCCC accounting is between countries, right? And so when you have a country saying it will account for a credit that goes to another country, you see that's a closed transaction under the UNFCCC, and everyone's relaxed. We know how to do that. UNFCCC scope over years started to edge towards the voluntary market as it grew up between Paris and Glasgow. And that's because we took so long between Paris and Glasgow as well. And now a host country can authorize a credit for voluntary use, which means that no country will be doing the other side of that adjustment. Think of double entry bookkeeping when it's used, because it won't be used by a country, right? So that means a corporate will retire a credit for a reason other than at the international level. And they will be doing that, and they will be reporting their emissions against completely different reporting requirements under the GHG protocol, and, for example, Scope 3 reporting. And the debate centers on whether it's okay for that corporate to do that and not have a country that they happen to sit in somehow reflect that. And that goes to whether or not it's then relevant for the country that credit comes from to do an accounting adjustment at the UNFCCC level. And that's the interface, and that's why I say this is technical, between 2 different accounting regimes trying to do something for 2 different sets of actors who are now overlapping. And that's why this has become such on yesterday in a discussion here, Kelly Kazaya, who I'm sure many of you know, called this generates big feelings. This generates big feelings it just does, amongst people who know both regimes. And interestingly enough, the ICVCM has a work program on that because it generates big feelings. And if that's one of your geeky points and you're really into that, please, on our website, sign your name up to see if we can include you in that process. And that's the issue. There are infrastructure things that can help tag that. But it's also about the transparency point. So ICVCM says you have to, the programs have to track who's retiring a credit, right? And then, that transparency of the way in which a corporate uses a carbon credit, and that transparency about its goal for having purchased a carbon credit that's authorized or not authorized. And that debate ensues in the other side, the less exciting side of this blue zone in the negotiations. And so I think that's the point you were trying to get to. And it becomes a philosophical journey if you go too deep. So I'll bail at this point. Okay. Back to you.
Okay, thank you very much. We had the gentleman here in the second row who had a question. And
Yes, thank you. Quick one, I think.
what's your name, sir?
My name is Arthur. I am from carboncreditmarkets.com. Lisa mentioned Unidroit is discussing the legal nature of carbon credits. When do you think we should expect that? And another point that came to my mind after I raised the hand is that the NDCs don't treat equally the compliance credits and the voluntary credits. What do you see about the future about this? Thank you.
Unidroit and Uncitral, and I would expect something over the next year to come out. ISDA has been very involved in that as well, and for the exact reason, you need to know how and if you can take security in the instruments. For taxation purposes, is it an asset or a contingent liability? There are a number of issues that flow from that legal issue determination or the recommendations that might come out in domestic contexts that are very important. So I would watch for that in the next year, and I'll let you handle the other one.
Yeah, and so, and again, this is like we're in masterclass level here. We've got, the legal nature of a credit and how you take security over it. This is, we've gone deep. So NDCs are what countries promise to do under the Paris Agreement. And everyone's in Paris, and that means everyone gets to say how they're going to do what they do the way they want to say it. And that means that when you write your NDC as a country, the information you give is, over time, more and more clear, and over time, more and more ambitious. But it also means that in many NDCs, it's difficult to understand directly what countries are doing to incentivize the mitigation that they've promised to do. And when they talk to carbon markets, they're not always clear in their NDC about which kind of carbon markets and whether they're going to have a domestic carbon market, whether they're going to use Article 6, whether they're going to use the voluntary markets. And part of the work in the Article 6 negotiations is about the relationship between NDCs and projects in the 6.4 negotiations, the mechanism negotiation, because there it was made very clear that over time that relationship has to tighten. And then in the voluntary carbon markets, under the ICVCM, we have a work program around the relationship between a project baseline, which is what you credit against, and the country trajectory, which is in the NDC. Because in the past, those might have been never correlated. But over time, under the Paris Agreement, every country is progressing down their emissions, perhaps after peaking for their development needs. So you start to need, eventually, to understand how any given project interfaces with what the government says is the country goal down. So that's this issue, right? And so there is no answer to what you have asked right now, because a country doesn't have to say, I am going to use X amount of tons in the voluntary carbon market, I'm going to authorize it, and then I'm going to, then I'm going to let it go into this market, this market, this market. And but over time, that story becomes really important for transparency because of the accounting issue we talked about, and because of the onward trajectory towards net zero for every country. So, I don't know how many people read nationally determined contributions in their spare time, possibly not many. But if you do, it's quite an interesting reality check on what this conversation looks like at a national level. Go for it, Lisa. You do it.
So if you take all of what Amy said and then you add on financial disclosure regulated requirements, particularly on public companies, you've got yet another layer that's part of the continuum. You can't see this in isolation. You have to go from the minutia of the regulated carbon and voluntary carbon requirements through to the regulated financial public disclosures. And this is where we're stumbling. We're having issues trying to reconcile those two things. So we're waiting for US SEC guidance, for Canadian related disclosure guidance. The UK has given its guidance, the EU has provided related guidance, and they're not all consistent right now. And the big issue relates to Scope 1 and Scope 3 overlap. The question is there potential double claiming? There is always double claiming of Scope 1 and Scope 3. Somebody's Scope 3 is always somebody else's Scope 1 emissions. So reconciling that, as Amy says, as Kelly says, creates big feelings.
Okay, I'm just going to take one more question, if that's okay, and then just would like to yeah, I know, would like to just maybe get a couple of closing remarks from people, and we have to be finished by 12:30, so there's a lady over here on the...
Thank you. Thanks. My name's Olivia. I'm from a company called Prometheum Carbon. We operate in South Africa and we help project developers develop projects. So I'm very empathetic to Carlos. Our grid emission factor is 0.9. So and we desperately need electricity and clean electricity. But associated with that is a question really to the panel. I think the panel agrees and recognizes that carbon credits are a key lever in the global decarbonization. Not the silver bullet, but a key measure. And you have entities like the SBTI and closely linked to the CDP who don't recognize offsets from emission reductions and some regarding removals. How do you counter that? Do you?
Yeah. Well, first of all, VCMI is trying to address that issue in providing some guidance on what's claimable. And then in relation to the new category that came out on Tuesday, the 28th, whenever that was, there is an on-ramping mechanism called the flexibility mechanism to really facilitate entities, corporates in particular, doing something, not being rewarded for doing nothing, and being able to use offsets for up to 50% of their associated emission reductions to get on that on-ramp to then become on track. It will take a year to get implemented. Some of us are disappointed about that. But it is finally a mechanism that really tries to create the bridge between where we're at on some of the stringency of SBTI and where we're at in the reality of decarbonization. And so I'm quite pleased that that exists. There's also a hook for further standards to come forward. As you know, SBTI does not address and cover all related sectors of the economy. So I would say get busy, get those standards in place.
Okay, so we're almost at time. I wonder if any of the panelists, having heard the discussions of the others and then the questions from the audience, I wonder if you would have any last remarks that you'd like to share, and then we'll wrap it up.
Yeah, I think this has been an interesting masterclass whirlwind tour through some really key issues we're facing at the very intermechanics of the carbon market. And I think my takeaway would be, if you remember one thing about the ICVCM, we are trying to create a threshold quality that enables buyers to step into the market with confidence, and that makes action easier. And action, everywhere, everything, all at once, whatever that film was, is what we need, right? What's the goal of this? The goal of this is Paris, achieving the objectives of Paris, and that means action with comfort and with facility and with efficiency. So that's what ICVCM is trying to do, trying to help the market be able to act.
And to add to that, we're all in this together, right? It's we all play our role. We're an exchange. We're trying to make it easy for people to buy and sell carbon credits, to make it transparent, to make it global. You know, carbon is global by its nature. You are going to have your domestic markets, but it's one, bit of carbon and it goes around the world. It doesn't matter where it's done. It's a global problem. So we need to pull together, and then you need to strip it back. It's there's so many infighters out there at the moment. It's a ton of carbon. If it's done a ton, it's done a good job. And that's actually the ton that causes the sort of conflict and, people questioning, is it, overestimating, underestimating? But in what planet are we where people are installing cook stoves in Africa and helping local communities in, making better health, planting trees, protecting rainforests? How is that a bad thing? And I think we need to change the narrative a lot. There's so much scrutiny around the ton. Is it doing what they say it's doing? But actually, take that aside and look at the good that's actually happening out there. I think that's very important.
I don't have any big thoughts to finish off, but certainly I think what we're seeing is the need for consolidation of basic attempts to achieve Paris and to keep that first and foremost in our minds, and not to put ourselves within a circular firing squad where we're losing the forest for a tree.
Carlos?
Yeah, just closing remarks. Wind is additional, so I'm. Yeah, but anyway, no, I'm happy to. The point is, we need the voluntary markets to fill in the gap until we get fully regulated. At some point in time, everybody's going to be regulated, and I'm very happy with all the work that you're doing. Qualified lawyers, we're happy with the exchange that brings price transparency to the world.
So I would just like to say, before we close up, I got to go back to, I was in Kyoto in 1997, and I remember all of the enthusiasms. I was standing outside the room when an agreement was reached in 1997, and I can only tell you how exhilarating it was that long ago to think that we're going to actually be able to develop a carbon market that can actually, assist in getting us, to what then was a different set of targets and a different set of measures. And here we are in 2023, and we are talking about Article 6.2, Article 6.4, the voluntary carbon markets, the problems with it, and we are, going straight in the wrong direction. We need to get to decarbonization. We need to move there. And my hope, and I hope that, I'm sure that all of you are working together in the great work that ICVCM and VCMI and American Carbon Registry and Vera and Gold Standard and all of the different organizations, the exchange and, all of the different players, Air Carbon Exchange is one of those. We're really trying to make progress. And I hope and I pray this week that in the next 2 weeks, there's some great progress being made. And I have a little bit more confidence, hearing what all of you have said and then seeing all of the enthusiasm from you in the audience. So I'd just like to say thank you very much. Let's push for the positive. Let's not make the perfect the enemy of the good, and let's hope that we can find ways to make the voluntary and the compliance markets fungible. And with that, I'd like to say thank you very much, and hopefully the rest of the COP is great for you. Thank you.